Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Thursday, September 30th, about 5 minutes after market close here in Jacksonville, Florida, 4:06 p.m. Eastern Time to be exact. And let's get right into it, folks. So what just happened? Indices fall, but many growth stocks bounce. However, we're going to look at some of these charts and discuss whether or not there might be reason for caution on many of these bounces we saw today and some of these higher beta / G5 type of names. As far as performance goes, the G5 actually held up the best, which is what you would expect if I've got growth stocks bounce under what just happened. G5 down 0.36%, S&P down about 1.2, Qs down 0.37. They were the leader for the most part of the day. They were green often when the other indices were not, but ended up having a really poor close on the indices, which has become a little bit of a recurring theme recently. The Dow down about 1.6%, mid caps about the same, and the Russell down a little under 1%. So market state has not changed. That is still pullback, and I mean has not changed since Don's last video on Tuesday. However, we do have a change on the trend gauge, and that is short term moving to bearish. You can see as of today, short term has moved to bearish. We've got the 21 crossing down through the 50 on most of the indices. Market leaders, we've seen some good action, we've seen some bad, but there still are some leaders acting relatively well. We're going to look at those here in just a second as well. And then medium is just on the tipping point of moving to bearish as well. Small caps kind of trying to hang on. Once again, they finished poorly today, but they were still relatively close to their 50 as of yesterday. So if IWM can't show a bounce or some kind of strength tomorrow, most likely you'll see that medium go to bearish as well. Long term, we're above the 200-day moving average on everything except for IWM, which is the small caps. All the moving averages are really, really close together on small caps. So before I get into the charts, as I always do, allow me to reference the team here at Revere. This is me. If you have any questions, please send me an email, hunter@revereasset.com. If you're interested in what we do, how we came up with the trend gauge, how our decision making works, what our strategy is, whatever the case may be, you can send me an email. You can send Dan, Tim, Meryl, Alex, or Don an email as well. So let's get into the charts, folks. We're going to look at the Qs here first. And up until about the last 45 minutes of the close, it looked like we were bouncing off of the 100-day moving average here. That's going to be this pink line. It's right at about 357, which is more or less the low of the day. However, like I said, we finished really poorly, so it does not look like a bounce as of now. It looks more like we're sitting right on it. So not great action the last 3 days. You see making a lower low each of the last 2 days compared to the gap down day, and not the action you want to see. Also not able to get make a higher high. QQQ cannot get up to this 360, 337 level today, although it tried right off the bat at the open. So nonetheless, you do see a little hookup in the RS line here today as the Qs outperformed the S&P. And for the most part of the day, the Qs were green and the S&P was down, which is why you see that RS line. But nonetheless, still acted better than the S&P did today. We're going to go to SPY here. Actually, I'm going to go back to QQQ because I want to mention something important. This 360 level is imperative. And for the better part of the day, we were all around it. Up until, about 30 minutes, 40 minutes till the close, we were slightly above 360. So that's kind of been like a battleground area for QQQ. Now you've got this 100-day, this 357 level becomes important because it looks like the Qs are losing the battle to retake 360 for the time being. And then here's this 21 crossing through the 50. As I mentioned, that's that green line crossing through the orange line there. SPY also sitting right on the 100-day, but like I mentioned, a really poor close, and we ended up slicing through it. SPX is a little delayed here on MarketSmith, so I don't have the actual real-time chart for you right now. But SPX is actually a little bit closer to the 100-day. Sometimes there's a little bit of disparity here, but that's not great action from the S&P. Also, what's important is we undercut this low here as well, I believe. If I can get that to hover over 428.86. I don't know if we actually got below. We didn't. It just looks like we did on the chart. So keep that in mind as we're kind of just right here at an imperative level for the S&P, and also could not stay above the 100-day. So not the greatest action from the S&P, and really it's going to look like that on most of the indices. Not the greatest action from really any of them. The Dow now getting very close to the 200-day, less than 1.5% away from it. Similar story. Looks like we're getting rejected here. Can't get through the moving averages. On the Dow, any strength is being sold. You see the volume bars here, these big red bars on the Dow. You saw, if you looked at the bottom, there's a similar type of volume bars on the Qs on the S&P, and then IWM, like I mentioned, was right on the 50 as of yesterday. Today, breaking through those lows, undercutting the 200-day. So not good action for IWM, which had been the better acting index because you had oil and gas and banks doing well. However, that did not necessarily happen today. It didn't save the IWM, for lack of a better term, today. So IWM getting below the 200, kind of ran right up back into the 21 and the 50 and ended up closing at the bottom of the range like most everything else did. And then lastly, mid caps, kind of similar to the Dow in the sense that it's getting really close to the 200 here. Rejected at these moving averages, as you can see, not able to make a higher high here on MDY either. So now that 200 becomes very important for the Dow and for mid caps moving forward. So before we actually get into some of the stocks that bounced today, some of the leaders, I want to highlight these two here because they become very important. TLT basically flat today, which more or less means that rates were pretty close to flat as well. So you didn't really see a whole lot out of banks. I'll pull up KRE just to give you an idea here. So banks down a little bit, still holding on up here, kind of where they've had a big, strong move. KRE went from about 61 up to 67, 69 right here in this range. So digesting that move a little bit today. Like I said, not much going on for rates. And then you also had the dollar down a little bit today, which for whatever reason, XME has become very, very correlated to this. It was green today. It finished very poorly, but XME tends to have an inverse relationship with the dollar. If the dollar is up, that's bad for XME. If the dollar is down, that's good for XME. But it seems that it's gotten increasingly sensitive to that as of recent. So let's go to some leaders today that are still looking okay and acting well. And number one is going to be Affirm. And really, this is one of the standouts today because it does have volume. It did close in the upper part of its range. So most of the growth stocks that we're going to look at do not look as good as Affirm does. So staying above the 21, I believe the 8-day is right here around like the 115 level-ish. I don't have it on the chart at the moment, but Affirm is acting maybe like one of the best stocks in the market at the moment. So it might end up being one of those cases where it's the last to fall type of thing. We also have Upstart. I should mention Affirm is owned in Grotection, and so is Upstart. Upstart, although it's down today, similarly acting pretty well, still above the 21 while the markets are not, right? So that's what I'm looking for here. Affirm, Upstart, still above the 21 while the Qs, the S&P are not, right? We did buy some BTU today on some strength and energy coal. This one got some nice volume today, as you can see, and really actually closed just a little bit above the 21 EMA. So we started a small position on BTU today in Grotection, and a few more here. NVIDIA finished not the best, but was up 1%. This is an example of growth stocks bouncing, but I think there's reason for caution. Like you see, okay, NVIDIA is up 1% today, and the S&P was down 1.5 or 1.2, 1.3. Well, that's great. Well, you look at the chart and you see a pretty clear rejection at the 50-day moving average here. So right up into that moving average and then finishing very poorly. What would prove me wrong here is if NVIDIA could get through both of these highs, right? Get through this 210 level and close above the 50. But for the time being, it looks like it was pretty clearly rejected at the 50-day moving average on NVIDIA. Upstart, I already covered that one. I apologize. AMBA, another name we still own above the 21 and still acting relatively well here. So 3 top names for you to watch: Affirm, AMBA, and Upstart, all above the 21, while every other index is not. A few more leaders from today. TAN up a little over 2%. This is not a good chart, but for what it's worth, showing some relative strength on a day where the market was very weak. So TAN up 2%. Many of these stocks in the sector are broken, as well as the ETF itself. AMD, another example of why you might want to exercise caution on some of these bounces, right up into a declining 21-day moving average, and really couldn't get through that area. That was the 105 area roughly. Same thing. What would prove me wrong on these is if it can get through these highs and get through these moving averages with volume. That's what you're looking for. So you can see AMD does not have much volume today, even though it was up 2.5%. Same story for NVIDIA, right? Not much volume here, even though it was slightly green. Keep going through these here. Crowd. This is another stock that's kind of in no man's land here. You can see this one right up into the 100-day moving average. Once again, no volume. So when stocks are in a downtrend or they've had a strong pullback and they get a bounce on light volume up into a moving average, that is not necessarily, in my opinion, a change of character or something that's really gets my attention. What gets my attention is clearing those moving averages with conviction and having volume on those days. You can see the volume pattern here on CrowdStrike. Does not look very bullish. Those are a lot of excuse me, a lot of elevated volume on selling and not much elevated volume on the buying. Keep going through these here. XOP and XLE digesting nicely here after a really strong move. And what's interesting here, I want to show you a monthly chart of XOP. You can see bouncing off the monthly mean here pretty much. And then XLE, a little bit slower, but very similar on the monthly chart. Daily looks very similar to what XOP is, kind of consolidating here as these moving averages start to hook up. And just a couple more of these growth stocks that bounced here. Snapchat bounced right up into the 50 and a declining 21, pretty clearly rejected. Not much volume here, but not as extremely light as some of the other names we've looked at. And one more in this realm, Snow, same kind of thing, didn't quite get up into the 21, but Snow's up 3%, half of the average daily volume. I'd be cautious with these types of bounces. I'd look for volume, look for things to clear these highs like these on Snow and get back through the moving averages. We're going to go to some of the laggards for today. XLI, this is your industrials ETF. You can see that is a pretty brutal look, and that's also just overall, that's not great for the market when you've got industrials acting very bad, getting sold on high volume, breaking the 200-day. XLP also having a pretty bad day here. As you can see, kind of a similar story, getting sold, breaking the 200-day. This is your consumer staples. ITB also down about 2% today, actually closer to 3%. That really accelerated into the close, breaking the 200-day as well. So, and these are some very important sectors to the overall economy and market that are starting to break down a little bit. I mean, this is home builders, industrials, consumer staples. You also had retail names get hit pretty hard today. Dick's Sporting Goods, which had been a gap up play, down 5.5%. Williams-Sonoma, also down 7.5%. So certainly some weakness in retail today. And lastly, you also have XLF kind of weak today, especially when you compare it to the regional banks, down 1.5%. Many of the regional banks look better than this XLF chart does. So certainly some weakness, like I said, some breakdowns in industrial staples, home builders, and there's more than that too. So we got to pay attention to what the market's telling us. We're seeing a lot of leading stocks slice through moving averages. We're seeing the indices slice through moving averages, and we're seeing these sectors start to break down as well. So keep that in mind. But I hope what I provided today was valuable. And like I said, if you have any questions, please send me an email, hunter@revereasset.com. But thank you all for listening. And one last little tidbit, if you did listen all the way to the end, I covered two energy stocks on the podcast today. So check out the podcast if you want to see those two names I discussed in the oil and gas space. So everybody have a great weekend, and I will see you all on Monday. Thank you.